Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden financial secrets of big companies. Today we are looking at the Gabelli Dividend and Income Trust, and let me tell you, this filing is all about a new type of preferred stock. Stick around to find out what it means for investors. Before we dive in, if you love getting these unfiltered insights into corporate filings, make sure you are subscribed. We also have a super active Discord community linked in the description below where we go even deeper on these topics. Alright, so the Gabelli Dividend and Income Trust, or GDV as it is commonly known, has put out a report detailing some changes. The main story here is about a specific type of share, their Series M cumulative term preferred shares. Think of these as a special class of stock with unique rules. Basically, on the 11th of December 2025, they officially adopted an amendment that lays out exactly how these Series M preferred shares work. This is important because it sets the terms and conditions for these shares, which is like the rule book for investors who own them. What this amendment did was take some of the fund shares that were just sitting there, authorized but not yet issued, and designated them specifically for these Series M preferred shares. They took 10 million of these unissued common shares and said, okay, these are now ready to become Series M preferred shares. This means the company can now offer up to 10 million more of these shares if they want to. So before this, they could issue a certain amount, and now with this change, they have the authority to issue a total of up to 30 million of these Series M preferred shares. This gives them a lot of flexibility to raise capital if they need it by selling these preferred shares. And as of that December date, they had already sold 16,850,000 of these Series M preferred shares. This means there are still 13150,000 shares left that they can sell if they choose to. This is a significant amount, giving them substantial room to raise more money through issuing these preferred shares. This entire filing is essentially about that amendment, Exhibit 3.1, which is the actual document detailing all the specifics of the Series M preferred shares. The report is signed by John C. Ball, who holds the titles of President and Treasurer. This confirms the actions taken are official and approved by the company's leadership. Now, let's put this into perspective. The Gabelli Dividend and Income Trust is a closed-end investment fund. They invest in dividend-paying stocks and income. Producing securities, companies like this often issue preferred shares to raise capital. Preferred shares are like a middle ground between common stocks and bonds. They typically offer a fixed dividend, making them attractive to income-focused investors, but they usually don't have the same potential for price appreciation as common stocks. What this amendment signifies is probably a strategic move by the fund to increase its capital base. By designating more shares as Series M preferred shares, they are preparing to potentially sell more of them in the future. This could be to fund new investments, manage existing debt, or simply to increase the size of the fund and its potential income generation. For investors, this means there is potentially a larger supply of these Series M preferred shares coming to market. If you are an investor looking for steady income, these preferred shares might be something to consider, but it is crucial to understand the specific terms laid out in that Statement of Preferences amendment. These terms will dictate the dividend rate, any redemption features, and other rights that come with owning these shares. Since they are calling them cumulative term preferred shares, the cumulative part is key. It means if the company misses a dividend payment, it has to make up for it later before paying common shareholders. The term part suggests there might be a maturity date for these shares. Looking at their registered securities on the New York Stock Exchange, they have common shares, Series H cumulative preferred shares, and Series K cumulative preferred shares. Adding Series M to this list means they are diversifying their capital structure and offering more options to investors seeking different income profiles. The fact that they are authorized to issue up to 30 million shares of Series M preferred and have already issued over 16 million shows a clear intention to leverage this class of shares. Investors should pay close attention to the dividend rate they set for these Series M shares when they are offered. Will it be competitive? Will it be attractive enough to draw capital? These are the questions that matter. From a broader perspective, the market for income-generating securities is always dynamic. With interest rates fluctuating, preferred stocks can become more or less attractive. The Gabelli Dividend and Income Trust seems to be positioning itself to capitalize on opportunities, whatever the market conditions. The strategy is clear. Expand the available capital through preferred stock issuance. In conclusion, the Gabelli Dividend and Income Trust is making a move to potentially raise more capital by formally expanding its Series M cumulative term preferred shares program. For investors, this means more opportunities for steady income, but it is absolutely critical to read the fine print of those Series M preferences before investing. This move highlights the fund's proactive approach to managing its capital structure and its commitment to providing income, generating investment options. Alright, that is our breakdown of the Gabelli Dividend and Income Trust's recent filing. What is your take on the expansion of their preferred shares and what it might mean for the future of the fund and its investors? Drop your thoughts in the comments below if you found this analysis valuable. Hitting that like button really helps us out, and don't forget to subscribe for more deep dives into corporate finance. And hey, check out the Discord link in the description to join the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.